Hi, I'm Jenny Brown and welcome to this week's MFB News. I hope everybody has had a really good week and has some lovely plans lined up for this coming weekend. In terms of what we got for you today, we're going to do our usual update on the buy-to-let mortgage market and tell you what's been going on there. I'm then going to share some data that the Mortgage Works has released via their latest landlord buy-to-let barometer, always very interesting read. Then I'm going to give you an update on some data that's been released which sits around the property market and around supply and demand, just to really kind of illustrate what's going on and why house prices are continuing to rise, albeit at a more staged pace now. And lastly, I'm going to share with you an update on the plans for the property rental portal, which have been released in the last few days as well. And this week, much like all the other weeks we have had more recently, have seen a new swathe of pricing increases across the board from the lenders in both the more high street end of the market and also in the specialist space as well. So what have we actually seen? So TSB have removed their 5-year fixed rate products. I expect them to re-release them. I suspect what they're just trying to do is bottom out the pricing. When the margins get really skinny and lenders are lending on rates which are essentially costing them money at a loss, they will often choose to withdraw the products before they've sorted out a new product set, just to avoid continuing to lead on loss-leading rates. So look out for those coming back to market soon. We've also seen the Clydesdale increase a couple of their rates by 0.05%. Virgin, who are also part of the same sort of group as it were as Clydesdale, have also increased their rates. Accord have made their weekly round of price increases and all of their fixed rates have increased by up to 0.46%. Interestingly, we've also seen Metro Bank withdraw all of their portfolio buy-to-let products. What this means is that if you are a landlord with 3 or less mortgage buy-to-let properties in the background, then Metro Bank have got an offering for you. But if you've got 4 or more mortgage buy-to-let properties, then you're classed as a portfolio landlord, and currently Metro Bank have no offering for you, which is a real shame actually, because Metro Bank actually have some really nice products and some really nice pieces of criteria as well. There is the high street lender, individuals only, no limited companies. But yeah, so a shame to see them step out, but I'm hoping this is just a temporary pause, probably doing this to slow down the levels of business that they're getting in. I'm sure they'll come back into this space in due course. Now, we're seeing a reprice from CHL. I haven't seen the new product set that's happening today. It's about 7:30 on Friday morning. At some point, the new rates will come out. But yeah, so CHL pricing will be going up. Paragon have also increased their product transfer and further advanced rates by up to 25 basis points. We've seen Suffolk make increases to expat and holiday let rates by up to 10 basis points. Kensington have increased 75 and 80% loan-to-value products by 20 basis points. Aldermar have increased their rates, and Zephyr Home Loans have also increased their rates by 30 basis points. So a flurry of activity again this week. Not as bad as in previous weeks actually. We have seen things slow down a little, but as we get nearer to the June base rate increase and the markets become much more sensitive, we may find that things start to move around again. Incidentally, what's been happening with swap rates is that they were climbing, then they started to ease back down ever so slightly. Now they've kind of gone back up again, and that's why we're still seeing this constant rejigging of rates as lenders try and get their house in order and make sure they're lending at rates which are both competitive in the market as much as they can be just now, but likewise making sure that they remain a profitable organisation, because we do need the lenders to be profitable, because if they're not profitable they just stop lending. We've seen that happen before, so it's important they continue in that vein. So where does this leave us in terms of rates? So right now, personal name vanilla properties, lowest pricing on the market is on a variable rate. It starts from 1.59, 2-year fixes now from 1.94%, and 5-year fixes from 2.25. In the limited company space, your 2-year fixed rates are now starting from 2.44, and your 5-year fixes are now from 2.79. Again, continuing the theme on recent weeks, that traditional gap of sort of high street pricing, standard vanilla pricing as it were, for individuals borrowing against traditional normal properties versus more specialist lending, so HMOs, multi-units, limited companies, people with really large portfolios. The gap there normally sits in terms of pricing in favour of the more straightforward stuff of between 1 and 1.5%. It's now come down and it's sitting 0.5% at the moment. Now, the Mortgage Works have released their latest buy-to-let barometer, which covers off Q1 in 2022. And I always find this really interesting. Essentially, what the Mortgage Works do is commission a research company to go out and speak to loads and loads of landlords to really find out, how they're finding the market, what their plans are for the future. Generally, in terms of being a landlord right now, how is it going for them? And I always find this really interesting because really this is just feedback from the horse's mouth, and that is what really matters at the end of the day. So in terms of those people surveyed, 18% are planning to buy a property in the next 12 months. 20% are likely to sell a property in the next 12 months. So what we have here is a net position of more landlords looking to sell than buy. Now, what's interesting is that those numbers have both come down. So actually, since the last time this report was published, less people are planning on buying property, but equally less people are planning on selling property. Now, this report is published quarterly, and what I would say is it's very, very sensitive to what's going on in the kind of wider market. So by that, we went into the pandemic and we had lockdown and we had rental holidays, for example. Landlords became much more kind of likely to sell property than they were to buy. And this kind of moves around in terms of what's going on in the market. So it's really, really interesting. Now, actually, the changes that we've seen from previous quarter to now, they're really actually very, very small. So I think that landlords are consistently, just surmising this data, probably actually largely just sort of, biding their time and waiting to see how things shake out over the coming months. I don't think there's anything here that's really too alarming that we would kind of want to get too excited about. Now, the other statistic that's quite interesting here is it says that 50% of landlords who are looking to buy a property going forwards will be using a limited company. And that is quite a large increase. Previously, it was in the sort of 30% territory. Now, I've always been quite amazed at how few landlords would plan to use a limited company. I guess at Mortgages for Business, because we have so many clients, around 90% of the purchase business that we see is limited company based these days. I find that the fact that the behaviour of our clients is so different to the wider market. Why is that? It's really hard to say, but it's interesting to see that actually the numbers have kind of swinging more in our direction, as it were, from the people surveyed. Now, in terms of landlord confidence, this is also really interesting. So landlord confidence in the most recent quarter has remained really stable at 46%, and that's when looking at the prospect of capital gains and also rental yields. So actually, again, things haven't really moved on since the previous quarter. One other thing that's really worth noting is that landlords are reporting an increase in tenant demand. This has now reached an all-time high, with 62% of landlords reporting either a slight or a significant increase. So that's a really positive thing for landlords, obviously. But I think in the last quarter, what I would deduce from the information provided is that some landlords are feeling a bit more disenchanted. Actually, some landlords are still incentivised to buy, but most landlords are it's kind of very steady eddy at the moment, just biding their time, waiting to see how the market pans out over the coming months. Now, despite everything that is going on at the moment in terms of inflation, cost of living crisis, interest rates going up, actually house prices are still increasing, and quite a few of my clients have said to me, why is this happening? I don't really understand. And I found a bit of data the other day, which was produced by Rightmove, which I think actually perfectly summarises what's going on here. So the number of buyers contacting estate agents in the month was 31% higher than the more normal same month in 2019. So in 2022, 31% more people than in 2019, which would be like a normal market because this is pre-COVID, are contacting estate agents registering to buy properties, but down 14% year on year, so 14% compared to last year. The number of properties available to buy was 55% down at the level seen in 2019. So we have 31% more people registering to buy properties, but 55% less properties available for sale. So this should really go some way to really illustrate the issue with the supply and demand. So there are more people looking to buy property than there were in a sort of normal market, but there are less than half the number of properties available for sale. And this is really what is underpinning house prices at the moment. And being completely honest with you, until those numbers change in the inverse, I actually can't, really see how things are going to change too greatly in terms of house price movements. We are seeing things slowing down, and I think actually the statistic there, which kind of slotted into the middle, was that number of buyers contacting estate agents was down 14% year on year. Really shows that actually the number of people looking to buy is starting to slow, but at the moment there's still a massive imbalance between the supply and demand. Okay, now more details have emerged on the government's plans for an official rental property portal for the private rental sector. And the plan here is that it's going to tie homes, landlords, redress and housing standards all into one website. Now, when this was initially launched, I know that a lot of landlords were actually incredibly unhappy about the prospect of this. Not that I think because they worry about having their name or their property registered and being kind of accountable. What they are worried about is if, for example, a tenant wanted to sort of make a negative comment or review of them, you know, how is the arbitration around this? What's the kind of due process that has to be followed for a tenant to be able to do this? And if actually, you know, the comment is grossly unfair, how do you get it removed? It's about protecting their position and making sure that things are fair and balanced. Now, the information that was released or has come out in the last week by our friends at iHouse have shared this with us very kindly. Is as follows. So like in Wales and Scotland, each privately rented property in England will have to be registered on the site, including its address, owner or landlord, and the agent managing it if applicable. And each property record will be tied to any decisions made by the soon-to-be established ombudsman/redress scheme system for landlords, which will enable disputes between tenants and landlords to be mediated. They also go on to say that it's understood that tenants would be urged to check a landlord's or letting agent's track record before committing to a property, and that the system could be used to block rogue landlords from the rental market, particularly if the property registration numbers are mandated to be in portal listings. So what we're essentially saying here is that prospective tenants will have the opportunity to go onto the portal if they're thinking about renting a property, they'll be able to view the property, understand the quality of that property, and also the people who are going to be managing it, so either the landlord or the letting agent, just to make sure that they've kind of got almost like Trustpilot, I suppose, like good reviews. Now, I think as landlords, and I'm a landlord myself, you know, so I welcome the possibility that rogue landlords who give, unfortunately, so many of us a bad name, and unfortunately people always work to the lowest common denominator. So a lot of the kind of regulations that have come in and challenges that landlords face are because of rogue landlords. So having something in place which kind of almost blocks them from the market is really, really welcome. But it's always going to be a balance between that versus, like I said earlier on, how sort of a fair process this actually is. So more details to follow on this. But it's interesting to see that this is being pursued definitely by the government, and I'm sure more announcements will be made very, very soon. And that is us wrapped up for this week. Thank you, as always, for taking the time to have a watch or listen. If you have any questions, we'd love to hear from you. 0345 345 6788, or have a look at our website, mortgagesforbusiness.co.uk. Do not forget, the next base rate review is in June. There is currently a 135% prediction that it's going to go up. So I think you can probably bet your bottom dollar that it will be going up in that case. So if you are in the market for a remortgage in the next 7 or 8 months, please do give us a call. We can look to secure pricing on today's money rather than the post-June or even the post-August rate rise. Have a lovely weekend, and I will catch you again next time.